Okay, so over the past few years, the Chinese equity markets have not been performing that well, relative to its peers or the other regions. Firstly, China has a property crisis, weak consumer confidence. There was also a little bit of instability or what we call uncertainty in terms of the business environment. And lastly, there was some geopolitical tensions ongoing. Recently, there was been, renewed interest into the Chinese equity markets because, the Chinese government has actually, rolled out stimulus or targeted stimulus, which is aimed to solve the mentioned issues that China was facing. I think firstly, the Chinese government rolled out targeted stimulus, which is aimed to solve or help the Chinese property sector. Second thing that, gained a lot of renewed interest is actually valuations of Chinese equity markets. Compared to its peers or compared to, its historical averages, valuations were actually very suppressed. Chinese equity markets were looking very undervalued. So better stimulus coupled that with, better cheap and reasonable valuations, that led to a lot of investors actually rotating back into Chinese equities. And then lastly is China is focusing on rebuilding its, trust with the business environment. So recently, President Xi actually held a symposium with a lot of business leaders. One of them is actually Jack Ma from Alibaba. So that symposium actually spurred, a lot of confidence in investors as investors finally realized that the Chinese government is actually, serious in building back the business confidence. And therefore, with all these three factors, Chinese equity markets has been gaining a lot of interest.